Hi, welcome to Edupedia World. Today we are going to discuss Introduction to Accounting for Grade 11. Topics we have covered in this presentation are: what does accounting means in common language? Why do we need accounting at all? Definition of accounting by American Institute of Certified Public Accountant, objectives of accounting, advantages of accounting, and limitations of accounting. What does accounting actually means? The dictionary says the process or work of keeping financial accounts. And what do we mean by these accounts? An account is a record or statement of financial expenditure and receipts relating to a particular period or purpose. You must have noticed that even in day-to-day life, knowingly or unknowingly, we do keep account of our daily expenditure. How? For example, when we leave house, we know how much money we are carrying in our wallet, and at the end of the day we definitely like to know what has been spent during the day and what has left in the wallet, or how much cash has left in the wallet. So when we do these calculations, unknowingly we are actually doing accounting for our own purpose. But when we are talking about financial accounting, it is basically accounting for a business concern. So here accounting includes the entire process of gathering the documents, the information, the work of keeping the books related to accounting, preparing the financial statements, analyzing those financial statements, and taking decisions based on those financial statements. So now coming on to next slide, why do we need accounting at all? Before going further, we need to understand why are we actually learning this subject. What is the purpose behind learning accounting? See, even in a very small business, it is not easy to keep track of your profit or loss on a day-to-day basis, or to keep track of exact result of the business transactions. It might be possible to say on an approximate basis that what is the result of a particular deal or from a particular consignment, but to say exactly what we have done in a particular period without maintaining proper accounts, it is almost impossible. So to understand the exact result of our business for a particular period, we do need to keep track of all the transactions we have done during this period, and to prepare the financial statements and to arrive at correct result from all these transactions. Though there are many more reasons to do accounting, but the primary reason is first to understand whether we have achieved our objective of doing the business or not. Also, when we are doing business, we have responsibility towards the society, we have responsibility towards the government, there are statutory requirements for maintaining accounts. So there are various reasons for doing accounts or maintaining accounts of our business or any business. The American Institute of Certified Public Accountant has defined financial accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which in part at least of a financial character, and interpreting the results thereof. So only preparing accounts is not the purpose of accounting. Analyzing those accounts and coming to a particular decision or conclusion, or making use of those information and analysis for decision making, is one of the major purpose of maintaining or preparing accounts. So now we will understand what is the objective of accounting. Recording business transactions in systematic way and maintaining it. Just recording the transactions in any way is not accounting. There is a particular way, there are methods of accounting. Going forward we'll understand how this is done. So that is one of the important objective of accounting. Calculating profit and loss. As we have discussed earlier, what is the reason of doing accounting. We need to understand whether we have made profit or loss from our business. So when we prepare accounts, so one of the objective of preparing these accounts is calculating profit or loss from the business in a particular period. Next point, determining financial position. How this is different from calculating profit and loss? Profit and loss is a summary of all the transactions, especially the revenue transactions in a particular period, whereas determining financial position at the end of that period is understanding on a particular date or day what is the total liability or the assets or the total equity of the business. So understanding this total picture is another objective of accounting. Helping the users in informed decision making. There are two major types of users of accounts or the financial statements. One is internal users and the second is external users. Internal users are the owners, the management of the business, those who use this information for various kind of decisions, and external users are like suppliers or the creditors, the tax authorities, the government authorities. So all these users need this financial statement or information for various decision making or uses. And one more objective of maintaining accounts is statutory compliance. When we are doing business, we need to follow certain rules, certain laws like taxation law, company law, and we need to prepare our financial statements as per the rules or the regulations or the guidelines prescribed by these laws. So complying with all these laws is another objective of doing accounting. For example, based on certain criteria, a business needs to get its accounts audited so that the auditors can report whether this financial statement has been prepared following all the rules and guidelines or not, because the entity then pays tax on the basis of the calculation or the profit arrived from this financial statement. Now coming to advantages of accounting. When we prepare accounts, we need to keep proper and systematic records of all the monetary transactions, the supporting documents, the vouchers, get it signed by the proper authority. So that's one big advantage of accounting. So another advantage is ascertains profitability of the business. As we have seen earlier, we need to prepare financial statements to ascertain profit and loss and the financial position of the business. So that's another advantage. Helps the management in controlling the business performance. Like when we prepare accounts, there are a lot of information which comes to the knowledge of the management, and it helps them in deciding how the business is performing and what kind of controls they need to implement. Then helps in comparing the results with previous years and also with the other entities in the industry. When we are running a business, we need to see year after year where we are heading to, whether we are achieving our objective of improving the profit line or the profit numbers or the profit percentage, which we call profitability. So when we prepare these financial statements year after year, after a few years, it helps us analyzing what is the progress of the entity or the business. Then we need to also compare our profitability or the financial position with the other entities in the same industry, whether we are earning the same kind of profit margins like others in the same industry or not. So the financial statements helps in comparing with other entities as well. Helps different users in decision making. We have already discussed this point in objectives. Can be used in legal matters as evidence. When we prepare financial statements following certain rules and guidelines and pay our taxes based on that, it becomes an authentic document, especially if it is audited and signed by the auditors. So it also helps in legal matters as a very good evidence. It helps in proper valuation of business. When we discussed the financial position, one of the point we discussed in objectives was determining financial position. So when we prepare the financial position of a business, it says what is the exact position of the business on that particular day. When we say position, it means what are the total assets of the business, what are the total liabilities of the business, how much are the reserves. So it gives the proper valuation of business, and the information from this financial position helps in doing various kind of ratio analysis and other analysis for valuation of the business. Now, the limitations of accounting. Though the process of accounting has evolved a lot, still it has its own limitations. Like, it cannot record non-monetary transactions. When you talk about accounting, it starts with accounting entry, and no accounting entry can be done without a monetary value or figure. So the accounting cannot capture non-monetary transactions. Similarly, it cannot measure qualitative aspects of products, policies, management and workers. Like, it can capture information how many units of a particular product was sold, at what price it was sold, but it cannot capture whether the quality of the product was as per the standard or not. Then it relies a lot on estimates. There are situations where we need to make certain estimate or follow certain method based on some assumptions. So these estimates or assumptions may be unrealistic. Then the transactions are recorded at cost. It does not reflect the change in price level. Like, it may not be very prudent to compare the sales made in year 2000 with the sales made in 2010, as the sale price per unit must be different. Then another limitation is, while preparing accounting statements, the accountant or the management needs to choose from various methods of depreciation or the stock valuation, and these decisions influence the preparation of entire financial statement. So we have covered introduction to accounting. Hope you have by now understood what accounting means. Thank you for following us.